Is the US stocks rally poised to continue? Welcome to Market Insight. I'm Ludovica Brignola. US stocks are up again today in a shortened trading session after Thanksgiving. Chip stocks are soaring, and these moves come as traders look to the end of a winning week and month. November trading largely centered on the post-election rally seen on the back of President-elect Donald Trump's victory. But is this rally poised to continue? Well, joining me now to talk about all that and more is Jack Janasiewicz, Natixis lead portfolio strategist. Thank you very much for being with us today, Jack. So you do say in your notes that for now, the markets have reacted to Trump 2.0 similarly to what they did in 2016. But looking ahead to the end of the year and the beginning of the next year as well, do you think that equity markets and bond markets will keep going on a similar trajectory? Because valuations are higher now than they were back then, and bond yields are higher as well compared to 2016. What's your view on that?
I think when you look at that roadmap from 2016, certainly a lot of the winners from back then are basically the same winners we're seeing today. So that blueprint is somewhat overlapping. But if you look at when a lot of those trades in 2016 ran out of steam, it was right around inauguration date. And so, we certainly don't expect these trades to run, largely because the market's pricing in what was said on the campaign trail. But as we start to get more details when the cabinet members are announced and policy actually becomes a little bit more firm, you start to see a little change there. And I would argue maybe, for example, the nomination of Bessent as the Treasury Secretary is a perfect example, right? Coming out and making comments that tariffs may not necessarily come in right off the bat at 60%. They'll slowly be worked up. So the market's repricing that because we're getting new information on the back of that. So wouldn't be surprising if we start to lose a little steam in some of these leaders in here as we head into the new year.
Lose some steam. Interesting. And regarding the broader backdrop, you say that the 2016 backdrop was much more favorable than what we are seeing today. Now, if we look at the bigger picture, so geopolitics, but also energy markets, capital markets, where do you see the main potential risks coming from?
Sure. And I think, when we start to look at those risks, those starting points matter. And as you're alluding to, if you go back to that 2016 backdrop, rates much lower, valuations much lower, the Fed a lot easier, the debt to GDP ratio a lot lower. So, you put all these things together and we're certainly much more accommodative. And today we're obviously much higher in a lot of those areas. So that cushion, if something were to slip up, is not quite the same in here. And as a result, I think that potentially gives you some downside. But, narrowing down the potential risks that we're paying attention to, aside from the obvious ones that a lot of people state, whether it's trade war, labor markets starting to ease up a bit, inflation concerns, maybe the two that I would highlight here are simply, the idea of headline risk, right? Trump tape bombs. He loves to tweet, and you wake up one morning and something hits the wires. The markets react accordingly. And I think the second one here is, these disruptors coming into the office. We're not used to having things change suddenly. We're used to sort of gradual baby steps. And as a result, you move quickly on some of these things, and potentially something could break in here, and that potentially could lead to maybe a 10 or 50% correction.
Right, and as you were saying, we've seen some cabinet nominations really being a disruption to the norm. Is this likely, though, I'm wondering, to also bring some sort of tailwinds, given, for example, I'm thinking deregulation of some sectors, some upside momentum for certain asset classes or not?
Yeah, and deregulation, I think, is certainly a tailwind for the broad market in general, but more specifically, I think it favors sectors like financials, energy, and even maybe down in cap, so maybe the small and mid cap spectrum. But one thing to keep in mind when we start talking about deregulation, especially on the energy front, we hear sort of drill baby drill. I think we learned some lessons back in 15 and 16 where a lot of these energy players started to prioritize volume over profits, and shareholder equity really suffered, and those names got pounded pretty hard. And so while certainly deregulation may help on the energy front, a lot of these companies are still going to keep in mind that profitability side of the equation. And so it might not be quite the tailwind that maybe some are pointing to.
And more broadly, what's the state of the US economy, especially if we compare it with the European economy, the UK economy? What are your thoughts on that?
We're running with this idea of U.S. secular, traditional leadership, if you will. And I think from that perspective, things are still a lot better here in the U.S. relative to the rest of the world, whether it be the growth prospects, whether it just be simply what's the driving factor, technology. Obviously the U.S. market very centric towards that technological backdrop prowess. You don't really see that around the world. And so I think that's giving that sort of leadership quality to the U.S. market. When I look at the European backdrop, there's so much stuck between a rock and a hard place, right? You've got potentially tariffs being levied against them. You also have certainly tariffs that are going to be levied against China. And as a result, probably both are going to act as a slowing mechanism for that backdrop. And, if China starts to look to export some of that overcapacity, it's going to find its way back into the European market. And that's just going to completely, I think, upset some of that competition there and make it even more challenging for the growth backdrop. So I think in the interim, there's still quite a few headwinds for the European economy. And as a result, you're probably still going to see the U.S. backdrop really remain the driving force here.
Very, very interesting insights. Jack Janasiewicz from Natixis, thank you very much for being with us today. And that is your Market Insight. Don't forget you can watch more videos on Reuters.com.